In this one video, you will learn everything about stocks, mutual fund, NSE, BSE, Nifty, Sensex, Zerodha, Groww and IPO. I wanted to learn all just like you. But today, I promise you, I teach you everything in this one single video. First of all, stock. Imagine there is a big company, but it needs more money to grow. So it can raise money from us. In return, it has to give a small ownership from that company. And that small ownership is called a stock. That means you have become a small owner of that company. And if the company grows, your money grows too. Simple. Now, stock market. The name itself will explain it. It's a market. Instead of vegetables, stocks are bought and sold. There are two types, primary market and secondary market. When a company sells its shares directly to the public for the first time, it's called primary market. For example, IPO. You probably heard, right? This company's IPO has launched. IPO means initial public offering. This is when a company offers its shares to the public for the first time. Second is secondary market. Here, after the IPO, investors buy and sell those shares among themselves. That's it. Now let's understand stock exchange. Just like you go to a market to buy vegetables, you go to a stock exchange to buy stocks. There are two major stock exchanges, NSE, National Stock Exchange, BSE, Bombay Stock Exchange. After the IPO, the company share gets listed on NSE and BSE. Now one question, how do people know whether the market went up or down today? Through indices. And Nifty represent the top 50 companies of the NSE and Sensex represent the top 30 companies on the BSE. If someone say Nifty went up 2% today, it simply means the top 50 companies on the NSE average gained 2%. Simple. But then what is Groww and Zerodha? Actually, you can't directly go and purchase stocks on NSE and BSE. For that, you need a middleman called broker. Examples include Zerodha, Groww and Upstocks. You create an account with them and you can start investing. But how do you know which company is good or bad? Not everyone has the time to research, right? That's where mutual funds comes in. You simply invest your money in the mutual funds. There are experts called fund manager who invest that money on your behalf. In return, they charge a small fee. So you don't have to do anything, you just invest. And since money is being invested and traded, there has to be someone to regulate everything so that frauds don't happen. That's why the government created SEBI. That's it for now and hope you got some value from this. And finally, the most valuable thing here is knowledge. Because one piece of knowledge can change your entire financial journey of life. And if you don't want to miss any such important financial knowledge, follow Shakti and